Friends, this is Kishore. Welcome back to my channel. And today's topic is, will gold price rise? Before answering this question, first we should know where we are in the business cycle because it helps us to know identify the opportunities around us rather playing with blindfolded. So this is the Prince business cycle. I'm going to through this cycle to know where we are. I'm going to see copper, lumber, crude oil, commodity index, and gold prices. Let's jump into the show. So this is the first Prince business cycle I'm going to. So it has six stages. Stage one and two and three are economic contraction, and four, five, six are economic expansion phase. So to know where we are, first I'm looking to the Dr. Copper because it helps us to identify the economic health. If there is more demand of copper means economic health is good. If there is less demand means economic health is not good because copper is widely used across the multiple industries. That's the reason we look at the copper price. So this is the copper futures. If you look into this chart, it is a monthly chart. The price is going between 650 and 800, and right now it is around 730, and it may looks like it may go down to 650 again based on the price action. And also if you see the CC indicator in the below, it is going down, and when it goes below zero, it like next couple of months, like 4 to 5 months, it will go down, and once it reaches the oversold region, again it bounces. So based on this, I'm little bearish on the copper side, and also I'm looking at the CFTC chart. So this is data from Commodity Future Trading Commission. It is released every week. It helps us to know the trend, is that commodity prices is in the bullish side or in the bearish side. So in this chart, you can see gold and copper. Gold is in yellow colored, and the copper is in the orange color. So if you see the copper managing money, in the management, the long side there are 41k contracts, but in the short side there are 58k contracts. And also in last week they added more short positions compared to the long positions. And also if you see that gold, the long positions are above 143k and short positions are 32k, and they added more um, uh, long positions in the gold, sorry, in the short positions. So this one also giving the copper trend is bearish and the gold trend is bullish. And another indicator I'm looking at is lumber. Lumber, this one also CFTC chart data. And lumber, if you see the short positions in the manager money, it is huge difference between the long and short. It tells us like when the housing market is good, there is a huge demand on the lumber. That helps us like, okay, if there's a huge demand for a housing market means economy is doing good. Otherwise, it's not. And also I'm looking at West Texas crude oil chart. So this was I've explained in my crude oil video. It is forming in head and shoulders pattern, looks like at the time. Now it is confirmed, it made a head and shoulders pattern, and now my target method price is between 45 to 50. And this also confirms during decision times, crude oil price will go down. It won't be, I mean, bullish in the recession side. And this chart is a SPX chart. The orange line is SPX price, and the blue line is a combination of treasury assets minus treasury general ledger minus repo purchase. That helps to know where the money supply in the equity market. Looks like there is a huge gap between SPX and money supply. So that's the reason I put it like a alligator jab. So looks either sooner or later that gap could come closer. So till now we saw copper, lumber, crude oil prices, and also SPX. But I want to look at the whole commodities, how the commodities looking at. So to know how the commodities are doing, I looked at the CRB index. CRB is like a commodity research bureau index. It is in multiple exchanges. So I want to see how the commodity index are doing, so that it helps us to know whether commodity is in a bullish pattern or in a bearish side. So first I'm looking into the CRB index in Reuters. So the chart has showing the pattern is making on the side price action is going sideways, but in the bottom if you see there is a rate of change of 15 months, 15 weeks. It shows whenever the rate of change bounces or goes above zero, the price went up. Whenever the price rate of change goes below zero, the price went down. So currently it is below zero and it is going down, which means the commodities index is going down. And this is Fidelity Commodity Index. This one also the same. This is a weekly chart with the rate of change of 15, and whenever the price bounces from below above zero, the price went up, and whenever the price rate of change went below zero, the prices went down. So right now this is also the same. It is below under zero and it is going down. And this is the S&P Global Commodity Index. This is also the same. Whenever the rate of change went went above zero, the price goes up, and it went zero below zero, the price went down. So after looking all these things, lumber, copper, crude oil, and commodities, so we are in a either stage six or in transition between stage six and stage one. So during recession times, I want to see like how the gold performed in the past. Out of seven recessions, five recessions, gold performed well. Only in 1981, 1990, the price not made. The gold price did not went well. And this is the chart talks about like how the gold price in the stock market index, are they overpriced, are they cheap. So based on this chart it tells it is just around 6 percentage. So it means the gold stocks are cheap, and it can go up to 10 or 12. And also I'm looking at the central banks, what the central banks are doing. The central banks are bought in last quarter 228 tons, which means it is also positive to the gold. And this one chart tells about like how the gold price performed during debt ceiling issue in 2011. In 2011 June, similarly whatever we are having debt ceiling decision date on June 1st, the gold price went up around 18% in couple of weeks. And finally, this is the gold chart. If you see the gold chart, it just broke the resistance and it is going up. If it breaks the resistance and goes up, my target price is 2800, as I mentioned in my first gold price video. And this is a GOLD, Barrick Gold Corporation stock. This is right now at $15, and I see good sorry $20, and I see good support at 15, and the resistance at 25. This is also one of the good stock I'm looking at to take a position. So after looking all these things, uh, my conclusion is right now economy is in a contraction phase, and during contraction phase, the recession periods, gold performed really well, and also during debt ceiling issue time, also gold performed well. And the gold chart, when we see the gold chart, it is breaking the resistance. So based on this analysis, I'm very positive on the gold price. Hopefully, it will rise soon. If you like this, thanks for watching. If you like this video, please like, share, and subscribe. And I'm leaving my Twitter link in the description. You can follow me in the Twitter. Thank you so much. Bye bye.